Hello, welcome to the XUCPA channel. Today our topic is IRS audits. Okay, so why do we include this topic as part of our 30 important strategies? Because we feel that if you manage to reduce your taxes, but it's illegal. So in this video, I'm going to talk to you about different scenarios that would trigger IRS audit. So if you don't want to get audited by the IRS, please stay tuned. The IRS has announced February the 12th to start filing taxes. I know some of you are excited because you've been waiting for this moment. You want to see what's really the outcome, how big is your refund. Due to the stimulus, there might be delay of refund. And for those of you who have been watching these videos or trying really hard last year to think of ways to implement strategies to reduce taxes, you are pretty excited about wanting to file your taxes. But as you compile your income and expenses, especially in the area of wanting to maximize your deductions, I do want to warn you, be aware of the IRS audit risk, meaning you don't want to go extreme to maximize your deductions to where you cannot substantiate. So today the topic is, can you get IRS audit? What is the risk of getting an IRS audit? If you have received an IRS letter for an audit, why did the IRS pick you to be audited? So let me explain. There are several situations that IRS would audit you. So usually there are two main criteria. One is that it's really random selection. So you're unlucky or unfortunate that you have been picked to be audited. It's random, but it's also computer screening. So with the IRS system, computer screening means, let's say you fall out of the norm. Let's say in your NAICS code or in your particular industry, everybody claims, say, the range of $8,000 to $16,000 of meals expenses, but for your particular case, you have $50,000 meals with your revenue size, then obviously you are outside the norm. Then in that scenario, you may trigger, there may be an audit that is triggered in the system because you are outside the norm. The second scenario is related examination. Let's say if you are a business partner of a multi-member LLC and somehow these transactions are kind of related to you, so you might also get an audit because of that. Now, there are some things that you really need to think about, prepare for, to minimize the risk of audit. I mean, the risk will always be there, right? I mean, who is going to tell you that I'll guarantee you would 100% not be audited? I mean, the risk is always there, especially when it comes to random selection and computer screening. But there are few things that you really can do to minimize your audit risk a whole lot, right? The first thing is, oftentimes if you have missing information when you file your taxes, the risk of being audited gets higher, and it's common. There are clients who forgot to give their CPA 1099 DIV or some sort of 1099 contract payment that they receive, from their customers. People who miss out 1099, it can be interest or because they never receive it from the bank. Those are scenarios when the third party actually report those income on your social, but when you file your taxes with your CPA, you forgot to or you did not include those income. Then obviously when your CPA submit the tax return, it's gonna create a difference, right? And IRS is gonna send you a letter and you're gonna freak out, you're gonna question, hey, did my CPA actually file my taxes even correctly? And then they investigate it. Some CPA would charge you a fee, some would not. Then in the process of investigation, sometimes or a lot of times, your CPA would tell you, oh, you forgot to give us certain information. And then you come back and say, oh, no, I forgot to include some expenses I didn't give you either, because at that point you want to try to reduce the penalties of the remaining tax balance. And then your CPA asks you, can you substantiate it? And you say yes. So they put in the expenses. And then the IRS, upon your submission of the amended tax return, they saw that, oh, okay, you used to have $10,000 of meals or travel, and now you have $15,000. Then they start asking, should we audit this person? Because it looks like this person is submitting additional expenses. So the second scenario that I kind of just mentioned is when amending their tax return. A lot of business owners rush to file the taxes and to wait to get a refund, or sometimes to get loan approved. That's very common, and then they will come back and say, oh, because I was rushing, so I sent it to the bank so that I can get my loan approved, but I really did not give you majority of my expenses. So now, can we amend our tax return? Usually the advice we give you is no. Yes, if you prepare to be audited by the IRS and if you don't freak out. For some people in this country, for people who have a team of tax attorneys backing them up, and people who get audited a lot, to them, they can't understand the process of being audited. However, in the case of a business owner or individuals, usually when people get an IRS letter, what do? You freaked out. You start pointing fingers, you start wondering, like, what did I do? No, I didn't do anything wrong. And that happens because of the inconsistencies that were created from the filing. So my best advice for you is, if you are not ready to file, if you're missing expenses, then don't file your tax return. File an extension. Make sure whatever you submit to the IRS is in fact accurate the very first time. Third, filing late. I don't understand. Some people wait till 3 years. We have a call the other day. A business owner said, well, I need some funding, I need PPP2, but I've not filed my taxes in the last 8 years. I'm like, seriously? You wait till 8 years later to approach a CPA as a business owner and say that you did not file your taxes in the past 8 years? Really? Now at that point, it's very obvious. Any tax return or any CPA will help you file it. You can't electronically file it anymore. You have to file paper. And with the penalties, with everything, you typically, business owners will be scrambling to try to find deductions, right? Because the more deductions, then the less tax balance that you would owe. The problem is, sometimes business owners get creative and they squeeze deductions into their tax return and they can't substantiate it. And especially when you're filing 8 tax returns together with the IRS, it is for sure going to create red flag. Especially under the scenario, if you're Schedule C, you make, say, $100,000, and then you tell the IRS you have $90,000 of expenses, and then you file a tax return with a lot of round numbers, like an estimate. You will be audited by the IRS. So then that brings us to the last point, crazy amount of expenses. If you are Schedule C, you're sole proprietor, especially in the scenario, sometimes, if you are a married filing joiner, the husband makes a lot of money, maybe $250,000 or more, or $500,000 or millions, and then the spouse has a business. The spouse kind of really have a hobby business, but she claimed that it's not a hobby business. So she makes almost no money for all the years that she filed Schedule C, but every year she spent like $50,000, $60,000, $80,000 in expenses, in all different types of, entertainment or meals or whatever, or travel, whatever you call it. Then at some point, of course, IRS is going to wonder, you will become the out of the norm, because IRS is going to wonder, like, is your business actually legit? Like, do you really have a business, or is it a hobby business now? Unfortunately, if you cannot prove you have no income and you always submit a lot of expenses for all these years repetitively, there's a pattern. The pattern is that maybe you don't really have a business, therefore those deductions is disallowed. So these are all the things that you really have to be thinking of. I know people can get really aggressive when they want to reduce their taxes, so they sometimes can, get crazy and forget, some of these very fundamental, important things in your life. It doesn't mean that getting an IRS audit is you committing a crime, but just think about it. If you have a business to run, how much time do you have to work with the IRS auditors to overcome and to handle an IRS audit? It's just really tough. So hopefully this will help you. We actually emphasize this a lot because we want to give business owners the right education. Here's a video 6 months ago. I shared with you 3 important tips for you to stay out of trouble with the IRS. I think you really should watch this video and think twice, especially for some people who are on the fence of trying to, just because you want to save a couple of $1,000s, you're trying to cook up deductions, we really strongly don't recommend that. And as usual, if you have comments, if you need to reach out, if you are confused, we're here to help, and we will see you tomorrow for a very important summary of all the important strategies that you have learned and you want to know and you want to make sure you implement when you file your taxes in year 2020. Thank you so much. Goodbye.